Sticco, right?
Sticco.
Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live from SmartCon in New York City. Joining us for the segment, we have Joe Sticco. He's co-founder of Cryptex Finance. We're here to discuss the next wave of on-chain financial innovation, what that will look like as tokenization matures. Joe, great to see you as always.
Always good to see you.
Welcome back to the show. Clearly, tokenization, hot topic this year at SmartCon. Tell us about Cryptex's mission and what problems you're looking to solve for investors in the tokenized asset space.
Yeah, so last time we had talked in Hong Kong, we talked about like a total crypto market cap solution.
Yep.
And we talked about doing it like over collateralized. But now that we have like all this regulatory clarity, we want to go straight to the institutions. So we're building out a product called Cryptex 40. It's 40 digital assets. And we're building that to kind of take on the institutional TradFi space, bring it to Wall Street, and get everybody involved with an index of 40 digital assets.
How do you think traditional investors will approach tokenized indexes as structured products?
So I think that there's a huge opportunity because it's like, global AUM, it's like $128 trillion. Global equities, 100 trillion. Total crypto market cap, 4 trillion. Total crypto digital asset products, 180 billion. So now that we have regulatory clarity, there's this huge potential for upside. And we think that now that they can actually come into the space, they're going to come in with trillions of dollars. So why not have index products for them where they could finally access the sector?
If there's demand, products
If there's demand, products will be there.
And of course, that's going to require a lot of transparency as it relates to, on-chain data.
Yep.
You need to build trust.
Yep.
You need to get the users, the institutions to get that buy-in. So what role is transparency going to play?
So that's where Chainlink comes in for us. So Chainlink powers our NAV of these feeds, where it's 100% verifiable. You could audit it at any time, and the code is completely open source. So we're taking 40 price feeds from Chainlink. We're essentially aggregating that data and creating an on-chain NAV that can be used by any institution to go on and verify as true. We don't need to worry about like page 74 on a prospectus of where it is. It's right up front and center. Can be verified anytime, and that's how Chainlink is powering our product.
Yeah, I mean, it just seems like the technology has really helped to expand your product capabilities and certainly the market reach, because the world's a different environment than it was a year ago.
100%. It's completely different.
Yeah. So as you see tokenization maturing, what do you think the next wave of on-chain financial innovation will look like?
Well, ideally, you see a lot of really great index products because crypto is incredibly volatile, right? So it's great that we're getting Litecoin ETFs and HBAR and Doge and all these different things. But the average American user, they own SPY. They own the Qs, right? They own the Nasdaq 100, right? So if we could do a crypto 40 type of product where, hey, it's 85% of the total crypto market cap in a single solution, it's a story. It's a story. It removes a little bit of the risk that's associated with individual names. We cap Bitcoin at about 55%. So we have that cap there. And then we have 39 other assets that are a little bit more risky, but now you have the whole sector in one token.
And you also have the methodology as well.
Yes.
To help maintain that or mitigate the risk to a certain extent.
Correct.
Right. If you can, what would some of those parameters look like? I mean, how much it moves, in a certain time period, or how frequently you're balancing and so forth?
So we're going to be rebalancing this quarterly.
Okay, that's kind of termish.
Yeah, a little bit long termish, but we have, we've seen some of our, I guess, competitors, their entry into the space. It's like 300 million for a digital asset, 100 million for a digital asset company. For Crypto 40, it's 500 million. It has to be traded on at least 3 globally recognized venues. They have to be incredibly liquid assets. It can't just be like a random coin. It has to be something that meets the minimum of 500 million. It meets 3 global exchanges. It's obviously traded and accessed by multiple market makers to fulfill any type of, basket. And then we take a look at that every 3 months and we rebalance. But for us, we're a little bit different because we're powering this by a DAO. So like when you hold CTX, our governance token, you can participate in rebalancing. You can participate in what new indexes come to market. So I love what S&P and some of these other people have done. We want to do it fully on chain. We want to be the S&P of digital assets. So for us, Cryptex is really trying to solve that gap, not only by a really tight methodology, not only by building Cryptex 40, but by also having it powered by governance holders.
see the momentum only growing from here. Appreciate the insight as always. Joe.
Absolutely.
Thanks for joining us on
Thank
Trade
you so much.
And thanks for joining me from SmartCon. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.